Oh, I think Forex day trading is borderline gambling.
So for me, Forex seems like it's a far easier way to lose your entire investment than it is to make significant returns.
The overall sentiment on YouTube is that trading is gambling. And in this video, I'm going to break that down and demystify that claim. I've been trading for the last 2.5 years, and the type of people that I see making these claims are the type of YouTubers that try something for a week and then proceed to take their conclusions. This means that there's not much research put into the video. It means that there's not enough data for the YouTubers to make that claim and regard the whole trading community as gambling. Well, the only way they are actually telling the truth is if they're saying that what they are doing is gambling. If they are trying to day trade for a week without having any prior experience and making money out of it, that's gambling. Because let's go to the definition of gambling. Gambling by Google's dictionary is playing games of chance for money, betting, but the second one is the most relevant one, which is taking risky action in hope of a desired result. And there's the key word, hope. Hope is not how you get an advantage in the long run. Hope is not how you make something sustainable. You don't just cross the road hoping that a car doesn't hit you. You look left, you look right, and then you cross the road when the probability of a car hitting you is low. So if gambling is based on hope, what makes trading different to gambling? Well, for that we need to understand the process of a good trader. A good trader learns technical analysis or fundamental analysis or both, and then tests it out with previous data. This gives us a set of data to understand if what we were trying to prove as something that works actually works. And we do this for a long span of time where we have 1, 2, 3 years of data to understand if the strategy that we're trading gives us a higher probability of success over the probability of failing. If the results come out positive during this time frame over a large sample size of trades, then we know if we have a probability on our side, meaning that now, in the future, we know that the probability of us being profitable is higher than the probability of us not being profitable if we stick to the same rules. But how does this profitability, how does this edge work? Well, the market is moved by people. Even though there's a lot of AI involved, it's still programmed by people. People form patterns of behavior, and the market is no different. The pattern of behavior is expressed in the candles that you see in the market, and you just think, what the fuck am I looking at? And like that, recognizing those patterns of behavior, you can create your edge. The analogy that I normally use for human behavior is this one. If I punch someone in the face, the probability of me getting punched back is very high. Because that's what people do. If someone punches you, you're not just gonna stand there. Probably. The majority of people are going to hit you back. And because of that, you don't punch people. The same thing happens in trading. You wait for a set of behavior to happen in the market for you to then be able to take a trade. Because you know that when you take the trade, the probability of it going in your favor is higher than the probability of it not going in your favor. And if it doesn't go in your favor, then you set a stop loss. Because if it goes against you, you want to protect your capital. And big traders, that's the main thing that they focus on, protecting capital, while still having a good risk reward. So let's say that the market starts moving down, and you see a pattern that indicates that the probability of the market to keep going down is higher than the probability of the market not going down. So what you do is you predetermine your risk. Your position size depends on your stop loss and how much of your account you are willing to risk. I personally only risk 1%, and if it goes against me, I lose 1%, and if it goes in my direction, then perfect. But now you say, 90% of traders lose. Yes, this is true, but let's look at the videos that have the most amount of views on YouTube. Videos of people actually teaching you how to trade or tips to be a profitable trader, actual valuable videos, or even paid content is not appealing to people. On Instagram, what are the traders that have the most amount of followers? It's the ones that brag, the ones that show you luxury. It's the promotion of getting rich quick, is a promotion of flipping accounts, is a promotion of basically free money. This is all basically the promotion of something that is not sustainable in the long run. It's gambling. And if most amount of views go to those videos, if the most amount of followers go to those traders, that statistic is not even accurate, because I would say that it's not only 90%, it's probably 99% of traders lose. We don't know the amount of people that just dip their toes in trading, start risking 10, 20, 50% of their trades in one account and just blow it without having an edge. Like, this happens every day, and then you just become part of a statistic, and this just creates overall negative sentiment around trading.
This is actually so frustrating. I didn't think I'd lose this much money. Losing 20% of an account in 3 days is really awful.
Because the percentage of people that do it sustainably is maybe 1%. So if 99% of people are gambling with their money, that's statistically correct. So maybe if you haven't been discouraged and you are thinking of dabbling in, how can you make it? Well, we've seen what makes people fail. It's high expectations of this being easy. It's high expectations on the amount of money that you can make in a year or two. And if it doesn't happen, people just leave and become part of the statistic. The way you make it in this industry is by going through a sustainable process, a process that takes years to master. You want to have probability on your side, and so you need a statistical advantage. You need your own data. It's not someone else's data. It's not my data. It's simply your data proving to yourself through previous price action that you have a profitable strategy. You only have statistics if you backtest. And you can only see if it works and if you can implement it if you have live market experience. And this just takes its time. You learn by making mistakes and learning from them. You learn by putting the probability on your side, again, making mistakes, and then just readjusting your strategy. But for this, you need to put the work in when nobody is watching, which is not what people are doing on YouTube and those Instagrammers that are just trying to sell you Forex signals. You will not get rich in a few months, and if you come in with that expectation, then get ready to pick yourself up after reality just slaps you in the face, or be ready to be part of the statistic. So is trading gambling? No, trading is not gambling if done right. Look at people that go into the casino. They do not have a statistical advantage. No games in the casino has a statistical advantage. Only blackjack if you learn how to count cards. And that is not gambling too.
Investments require calculated risk with a warranted mathematical expectation of return. Whereas most gambling just involves throwing your money at a place and hoping that some of it comes back.
If you have a statistical advantage, it's not gambling. Just like crossing a road is not gambling, you just have to take the right steps. So in conclusion, if you're trading stock options that expire on the next day with no risk management, without any knowledge of the market, if you're trading Forex without any stop losses with huge lot sizes, then you're gambling. Yes, and you'll be part of the statistic that says that 90, 95, 98% of traders fail. But I hope this helped you, giving you a perspective of someone that knows that trading is not gambling, instead of YouTubers that try it for a week. And this is no bashing on those YouTubers. I actually really like to watch Biahez's videos. I actually like watching Daniel's videos. I just don't agree with their opinion on trading. I hope this was helpful in any way, shape or form. Let me know what you thought of the video in the comments down below, and I'll see you next week. Peace.